Hey everyone, this is Day Trader Rockstar, and I want to kick off this video with a little education on my part, and again, talking about one of the most important basics of trading. You know, we would study so many different techniques, and you know, we read about technical analysis and fundamentals and all the ins and outs of the market, but there's such a you know, when it comes down to simplicity of the trade, it really is that. And I kind of, myself, and I'm sure many other traders do the same thing, is kind of drift away from the simple stuff. Trend following, trend identification, you know, having that, you know, wind behind your back of a trade, you know, a downward trade versus an up, you know, a move going up, you know, a long versus a short. And today we had some bad news to kick things off. We had the employment report, the jobs report, came in under the estimates, and we really got hit on that. And it could feel that the pressure was down most of the day. Now I didn't do much. I had like just an early morning session, and then kind of started working on some research for that next week, which this video is about. But also got into a couple trades before that, and you know, just to break down the trades, there was two distinct trades, you know, scalps I really got into today. One was Time Warner, TWX. And the reason I got into Time Warner, you know, first of all, it's been a stock that we've been watching over the few days. It's been showing great strength, and it's a stock that's really just pulling back. And I scanned through it, and I said, well, you know what? What do we use to determine trends? You know, basically trend lines and directional, you know, basically trend lines. You know, if you have an upward trend line, then you have an upward trend. Also like to see the momentum indicator. I call it the stochastics. The momentum indicator, which way is the momentum heading, and there's a short-term and longer-term trades. You know, you have the bias on a daily stochastic. You know, when it does turn over, you know, that's a longer time frame than a 60-minute or a 5-minute. So you have that longer move down, but during that longer move, there's shorter time frames in there, and that's what we try to capture as a trader. You know, you try to take the shortest time frame that you can, make a good profit, and move on to the next trade. Sometimes it, you know, takes a couple days. Sometimes it'll set up, and you'll get a lot of action in a stock, and you could really scalp it. So Time Warner is one of the ones I looked at today, and what jumped out at me was the 60-minute chart, and I said, well, this is a very bullish stock. It just came out of flag. It moved up. It's kind of flagging out. It kind of got a gap down, but look how we pulled back on the 60. That's always, I always want to have that at that level crossing back over to take a long. You know, here you can see it back here, and we discussed this on the radio, and I just showed it, and that's exactly why I got in. You know, that was exactly because the 60-minute gave me that signal. It wasn't, you know, there's no guarantee it wasn't going to get flushed down with the market, or, you know, continue, because it did gap down, you know, but moved up quite a bit throughout the day and ended up actually closing at its highs. But it was basically off of that 60-minute stochastic, which is a good indication of short-term trend. When it's pointing down, usually you have a downward bias to the trade. If you know, if it's turning up, then you have an upward bias. If you have a very choppy embedded stochastic, depending on where it is, you know, usually is a sign of either continued strength, or if it's down here, it's continued weakness. The times in between both, you know, I'm trying to figure out exactly, you know, and this is another good example. We didn't even bring this into play, but that 60-minute chart gave us a nice 2 points on the trend line. It came right down to that trend line. So this is really a multiple indicator setup. You know, we talk about the multiple indicators, the 5 indicators you use for high probability setups: stochastics, trend lines, recognizable patterns, support, resistance, moving averages. So there was a lot of different components here lining up, and we got a nice bounce off of that. So the second trade I got into today, you know, is LQDT, and now this one had recently got slammed in the market, so I noticed over the last couple of days it was actually showing some good strength. The daily wasn't really giving us a good signal because it really got hit on some news, and when news gets involved in a stock, you usually have that weakness that continued. But this one was kind of grinding up, so I noticed it this morning. I said, all right, let me get in it. Well, then I looked back, you know, and it was just basically because I followed that stock for the last couple of days, and I'm like, oh. But what I didn't do is really take a look at the indicators. And when I went back after the market, and I said, well, let me go back and review my trades, I noticed one thing. When I got into the liquidity services, I didn't even check, and then we had a downward bias on the stochastics. You know, we crossed over, we're pushing back down. This is really the day right here. We could zoom in. That's the 60-minute. It was really crossed over. It wasn't until the end of the day that we got to cross back over here. But it was the majority of the day. This started out as a day here, and it was just a direct move down. So I was going against that level. And from that point on, it did move up a little, but then it kind of sank down here, you know, probably from where I got in. I think I got in around, it was around here, early in the morning. It went sideways. It looks like it was going to test the highs, but again, 5-minute stochastics rolled over, boom. Then we ended up coming back up, and now we actually have the 60-minute set up. But a good example of a trade that goes good because of, you know, just paying attention to some of the underlying indicators, and a trade that didn't work out. And I ended up getting out of this because I was just like, well, this is getting close to the lows. At the end of the day, it came back actually and went a little bit higher than my entry. But that's, you know, that's the nature of the game. You have to wait for the right time. Now, if you go back here at the point maybe where you might have gotten in and made a good trade out of it, you take a look at that time frame. That was a little before 2 o'clock, and you'll find out that, hey, you just got a crossover. We started turning back up. That's just on the 60, and you can even get the 5-minute chart, you know, right here starting to ramp up. So you had a lot of things going for it on momentum-wise, and that's really the simple tip for this week is, you know, always refer back to that 60. Try not to take that trade against it. So, you know, a great example was the TWX. You know, it's just a classic, you know, oversold level at multiple time frames, by the way. You know, it was multiple time frames. So it looks good. All right, so again, we're going to go into the watch list, but before that, I just want to mention a couple things. Next week, we should be kicking off Ultimate Trader Showdown. All right, that's going to be something really big. I want to start ramping that up into the fall. Really want to start kicking it off this week, so be prepared to hear a lot about that next week. I'm going camping this week. Yes. I don't know. All right, let's get on to the watch list. All right, and also let's just take a fast look at the S&P going into next week. Now, we have, it looks like we're going to get a daily crossover here, and again, just going back to the main theme, momentum. You know, what was really great on the daily is we had a positive crossover on the daily. We pushed higher, we broke through some levels. We're staying within this upward channel. And this can easily become a bear flag because we haven't taken out the recent high yet. So, you know, we are in a kind of a weird area here. We are overbought on the longer term chart, and so we got that pullback starting yesterday. And then today we had the employment numbers out, and we had that follow through. But what's showing up on the 60 is something very interesting. We had a nice bounce at the end of the day, and look how fast that 60-minute stochastic came back down into an oversold level. Last time we were there, really, you know, screamed buy there, and I think that was one of the better setups in the market right here when we ripped. But you could see why it ripped there. You could see why it's bounced here and why it's bounced there. You know, two good areas in the market that got oversold and, of course, got a short-term bounce. Even though this crossed back over, you still had that momentum trade on the 60. So we just got a crossover here now. Of course, a lot of things could cause this to fail and stuff. But being able to be down into a level where there is a reaction, and, you know, if there is a reaction, then you want to know, you know, be prepared for it. And that, you know, being timed also on the 5-minute chart at that same time frame, it was overbought on the 5 minutes. So it was a 5-minute, it was a multiple time frame setup here. It was the 5-minute, it was the 15-minute. You can see the 15-minute also right here. It got a crossover. Let me bring it back down. So there was multiple time frames, the 5, 15, and 16. When that happens, we're looking really good. Also, it was the 1 minute at that same time. We're at the 1 minute now. I was in the office, and it was funny because I was saying this is where I want to be. Let me put my stop here at 1342.50. I want to run to the bank for a second, right? And I said I have a feeling my stop is a little too tight. Came right down to 1342.50 and then ran 10 points. So again, you know, but this whole area right here, me being interested in this area, taking a couple trades today. Most, the area right here it shows up on multiple time frames. We have the dual stochastic setup, we had the 5-minute setup, we had the 15-minute setup, and we had the 60-minute setup. So that times it right down, and it's the only time that this really happened on all the charts. So that's why it's really an HPS zone here. And from that point on, you could actually see the market how it rallied straight up. Now, it's very easy to go back and just look at it. When we talk about having that 5-minute setup and just waiting on that 60, and that 60 getting that crossover, and it just is what it is. There's no arguing it. It's right there. We even call it before it happens. Because of the setup, and all you do is say, all right, 60 minutes oversold. Watch for that bounce here, and that bounce, we did get that big aggressive bounce. Now going into next week, that's probably a little more difficult. I don't know if this market's done going up. It still feels okay, but we're going to get into some new news next week probably, and we're going to play with the indicators. I want to see that follow through. If I could see this market start to build back up, and remember we had a news event here, and you get back above a news event that marks a spot in a stock, usually a large candlestick or what we call a large range bar. Once you break above those levels, here was an example of why that was a resistance area, and you could see what happened to the market once you broke through that. There was an explosive move here. So again, we have this area up here, which was kind of almost a gap here. To get back up above that level, or at least back up to 13, above 1364 would be really bullish. So Monday, Tuesday going to be interesting. Historically, Stock Trader Almanac calls for a bullish week. But news is a major player right now. So not to waste any more time, we're going to get going on the watch list, and we'll kick that off.